Okay, so a very good morning to everyone. Hope you all had a fantastic weekend. Stay safe, anyone in Ireland, on the northwest coast, or indeed in Northern Ireland, for the weather. Ophelia, I believe, is going to be reaching you shortly. But obviously there's been quite a bit of news, financial news that is, that's occurred over the weekend that we need to get through today. So I'm going to take a bit of a different tact, i.e. I want to keep this as kind of concise as possible. So what I'll do is I'll talk about a lot of the fundamental news that's happened, some of the directional biases that we've had. But then what I'll do is, after the briefing has been delivered, if you want to jump in the chat room and talk about some strategies and technical levels, I'm happy to do so. So getting straight down to it, let's have a look at what we've got in terms of the charts this morning and then the associated news flow. And one of the first things that you can see is in the top left hand corner, the euro-dollar pair is a little weaker. Hasn't really fed through too much into the equity market as yet, but as we generally see in terms of an inverse relationship, the weaker the euro becomes, it has been supportive of the kind of export related European names, particularly given the fact that only 6 weeks ago euro-dollar was trading in excess of a 121 handle. So first of all, let's talk about the reasoning for the euro currency weakness, and certainly there has been quite a few political developments to talk about. And so this being the first one, which is Austria. As we know, and we talked about this for quite a bit of time. Last week, this was about the potential for this chap here. You can see in the bottom left hand corner, Sebastian Kurz has now become the youngest at the age of 31 European political leader. Austria voters paved the way for the Nationalist Freedom Party to enter government, though, which does herald a shift to political right. That's likely to make the country a more prickly ally for the European partners. You know, this is particularly prevalent in the context of post the French elections, so the end of May, or the end of April, May time, when Emmanuel Macron won. It was all about the kind of unity of Europe, closer integration of Europe forged by Germany and France. However, given the election situation that occurred in Germany and now this situation in Austria, things might start to take a bit of a more negative turn in terms of the ability for Macron to deliver on those promises. Now, this is the actual results, just quickly, of the Austrian election. So Kurz's party, the People's Party, had 31.6% of the vote. This was actually slightly lower than what the polls were indicating, which was about 33%. You then had the Social Democrats and Freedom Party, which were second place, pretty much neck and neck, and they actually both outperformed slightly what the polls were saying. So the leading party, the 2%, 2.5% or so, kind of split between Social Democrats and the Freedom Party. Now, the reason why this is particularly interesting is because the People's Party and the Social Democrats have kind of ruled out any potential type of coalition. And so actually it's the People's Party and the far-right Freedom Party which is the situation that's likely to be formed in terms of a coalition. Now, this is interesting because of, really, if we look at this next chart, this is Austrian support of the EU. So this was voters who said that there were more benefits than drawbacks to being in the EU. So strongly agree. So at the moment, you know, this is kind of still tipped on the strongly agree fairly side. But really it's this swell of anxiety about immigration to Austria, which has been a build-up of the kind of mass immigration that we saw of mostly Muslim refugees during the Syrian crisis, Afghanistan, Iraq, into Austria, that's really, I guess, acted as the catalyst to fuel this more far-right sentiment within the country. So this is kind of part one, if you like. This was, as I would say, expected, but I guess the realization of that coming to fruition has dampened sentiment a little bit for the euro currency. The next part of this, of course, is it's not just about Austria, it's also about Germany. And this was one of the biggest kind of events leading up to Merkel's ability to actually form a cohesive coalition. And the reason why she hasn't really made much ground as yet is because people were awaiting for the lower state of Saxony to hold their regional election. Now that area is particularly relevant because of the size. I think the population is particularly large, and it's the home of Volkswagen in terms of manufacturing. But what has happened here is the CDU party, I'm not sure if they got a chart here or not, but in summary, the CDU party, which is Merkel's, goes down to defeat in Lower Saxony after SPD's late surge. So if you remember, it was the SPD on the national level that fell short of Merkel's CDU-CSU party, but in this specific region, the SPD have outperformed and beaten Merkel. And so what this means then is, overall, it translates into, again, a slightly weaker hand for Angela Merkel. This doesn't at all change the fact that we're going to see the formation of a Jamaican coalition in the coming weeks or months, however long it takes to get that kind of deal done. But her losing ground in the Lower Saxony just means that it weakens her hand in negotiating with the Freedom Democratic Party, the FDP, and the Greens in Germany over the kind of balance of powers when forming that Jamaican coalition. So again, you would say that this is a slight negative, but I would say okay, it was just a little bit of a surprise, I guess, that the SPD actually beat them. So that's the second catalyst for European politics, and the third and final one is Spain. So if you remember, following on from the independence vote that happened in the Catalan region at the beginning of October, we had PM Rajoy from Madrid last week give an ultimatum of Monday morning to the Catalan president to either, what are you doing with this? So you're going to call formally an independence vote, and this was kind of the sequence of events then for potentially Madrid coming back to then invoke Article 155, which would be that taking control of that autonomous region, if you like. So what's happened this morning was that deadline has lapsed, and the Catalan president has issued a letter defending the region's claim to independence, a move that could cause the Spanish government to begin this process of suspending self-rule within days. So really, I guess you do need to keep an eye out from really now going forward, certainly over the course of the week, for what is Madrid's response. So the Catalan have basically said that they're going to continue to pursue this independence angle. It's down to the federal kind of government now of how forceful they are. Do they invoke 155, which would be more aggressive and probably contribute, I'd say, near term to more euro weakness? Or do they just say, okay, that's fine, let's talk it out first, but still kind of dangle the threat of invoking that specific legislation? So definitely something to watch. So combination of the three. You've got the Austrian vote, which is kind of the going to have a far right leaning potentially coalition government then in Austria. You've got in Germany Merkel losing some power, which will only further complicate her pursuit of coalition in Germany. And then you've got this ongoing situation about the independence of Catalonia. So hence euro a little bit softer this morning comparative to sterling, which just breaking its overnight range saw a bit of a move higher this morning, but basically is flat, so just minor positive comparative to euro dollar, which is down about 31 pips at the moment. So that's the situation in Europe. In the UK, this is the latest. Obviously Brexit talks are still underway. We saw the breakdown of the fifth round of Brexit negotiations, and really we're still have made, as Europe termed it, zero progress last week. This was the latest at the weekend. I'm sure you would have seen this on Sunday, but Theresa May is heading back to Brussels as of today to personally intervene in deadlocked exit negotiations with Europe. Apparently this was already in the schedule, but it wasn't publicly known. But May, who's also called Angela Merkel on Sunday, will meet over dinner with the EU Commission President Jean-Claude Juncker and Barnier. And this, of course, is pertinent timing because it comes ahead of Thursday's European summit. So I would say you're likely to hear some press leaks, potentially rumours, the closer that we get to that Thursday summit. At the end of last week, Britain was saying, well, there could be a case if we can get some sort of agreement done by that meeting, so by the end of the week, whereas Europe's been a little bit less committed to making that type of commentary. But what I would say is that to get a real insight towards the current feelings and sentiment of the two parties negotiating, you're probably likely to hear rumours and leaks as we get closer to that meeting. So I would say probably Wednesday, then going into the Thursday event, which is due to last into the end of the week. Now, this is a couple of bank commentary pieces that I saw, and obviously we're talking a little bit longer dated than looking quite intraday. But this is an article on Bloomberg. They've basically gone out and surveyed a whole group of the bank desks to ask them if there was a no deal, because this has certainly been a renewed risk that's emerged over the last week because of some of the comments that Theresa May, I think, has been or had to make in order to kind of stabilise the situation within her own Conservative Party, given the pretty dire performance at the Tory Party conference about this whole, we would be willing to go for a no deal, but a no deal Brexit scenario could see the pound slide to 110, according to some banks. Now, just a couple here. Morgan Stanley saying that they see a 15% probability of a no deal resulting in new lows in cable, with the currency falling to 111. And again, this isn't talking about intraday move, this is talking about longer term, so I'd imagine this is more 6-12 month horizon if they were seeing this to hit target. Mizuho Bank, probably one of the most bearish here, calling for 110. If we start going down, Nomura, if no deal, pound falling 110, 120. ING actually were one, if I remember rightly last week, that were kind of bucking the trend. They said no deal is currently a tail risk of around 5%. So they're seeing it as a smaller risk. I actually agree. I think no deal is not going to happen. I'd actually put my name on the call board right now saying that no deal is not going to happen. Sam North, you heard me. Because it's too much of an issue. No deal is just an idle threat, I think, on behalf of Britain. We must secure a transitional deal. This is definitely a no-brainer, in my opinion, in terms of economically. As much as I'd say economics has proven the biggest kind of misguided thing to base decisions on when it's come to sentiment to try and judge European politics. But we're not talking about Joe Public voting, we're talking about the politicians now voting in order to facilitate the type of deals and trade deals and so forth that are hugely complex, and it's an absolutely mammoth task that would come with dire consequence economically for the UK if they do not get a transitional deal. So for those reasons, I feel that I agree with ING. It's a possibility, but I would give it an equally small size chance of happening, 5%. The question is here, and I think ING were of a similar thinking, was that, okay, if we're so sure then that the transitional deal is going to happen, then calls for a 110, yes, that would probably be potential targets, but ultimately what might happen is when this transitional deal eventually does get done, would it be a supportive factor then, having provided some clarity at least over the next kind of 3 to 5 year horizon, and actually the pound gets supported in that instance. Looking at the pound though, let's take a slightly different tact, because for this week, this is an incredibly important week if you're trading the pound, because there's going to be a series of economic data, UK specific headline tier 1 data, that will really justify or not whether the Bank of England will hike interest rates come November. Now, for me personally, I'm absolutely shocked that the market is priced, I read this morning, over 80% for a UK interest rate hike in November is how the market is priced. So it's almost as sure as that the market is pricing for the US to raise rates again in December. Now, obviously, We know the context. It's really the inflation issue which is going to prompt potentially the Bank of England into action. And so, first of all, if we did get a UK rate hike, well, I mean, going back all the way to 2006, so it was the summer of 2006 when I first started in the market. That was when I was a junior on the desk, and I remember calling a couple of Bank of England rate decisions at the time when they were hiking kind of 25 basis point increments. But the last time we hiked rates was, I guess, kind of mid-2007, then obviously the onset or slaught of the financial crisis and the big plummet in interest rates to where we are at the moment. So if we did get an interest rate hike, it's going to be the first time in about just over 10 years. Now, the reason why this week is so important is because there's quite a few things coming out, and really Tuesday is going to be the focal point, because Tuesday is inflation day. And if you look at the forecast ranges from a median basis of all of the economists surveyed, we're expecting inflation in the UK year on year for September to rise to 3%. So unfortunately for Mark Carney, he's going to have to write a letter to Philip Hammond explaining why he's failed to manage price stability and keeping inflation to target, which of course is 2% in the UK. So inflation for the first time is going to go back to 3%, which is important because if we look back, it's been a couple of years now since we've been that elevated. So this is really the pressure point which could force the Bank of England. If we were to get 3.1%, I think then actually November is on in terms of a rate hike. 3%, I'm still not sure, because as we know, if you look at the other parts of the UK economy from the consumer's point of view, certainly in terms of how this has translated then into spending power and therefore profitability of corporations and the net kind of cycle that has then on a gradual economic slowdown, an interest rate rise is probably the last thing that we need. But if this inflation is high enough, as I say, 3.1 or above, then the Bank of England basically are left with no choice. The problem I see, though, is from a bank perspective is how much of an impact is one rate hike going to have? You know, 125 basis point rate hike. The problem here is then, can the Bank of England viably start to implement a sequence of interest rate hikes in an incremental fashion, which is typically the case in which central banks like to act? But then the higher they go, the more problems that that's going to cause, particularly as we've just discussed in this political uncertainty going forward. So real tough decision making that's going to come the way of the MPC, and really that data is absolutely critical for the fate of November hike, and therefore markets' reaction in the pound will be very large tomorrow at 9:30 when that data comes out, because this will be traders basically trading whether or not November hike's going to happen. Not only that, you have Mark Carney. Well, check that out for a typo from Bloomberg. Going to call him out for that one. Mary Carney. So this must be Mark's wife or something. Mary Carney is stepping in. She's going to deliver the Treasury Committee hearing. But then you've got Dave Ramsden, who's one of the newest MPC members. So very interested to hear that he's also going to be speaking as part of his appointment hearing. Then on Wednesday, you get the unemployment rate, but more importantly, you get basic wage growth. Now, if we get a very high inflation number, but wages miss, again, this really complicates the Bank of England's ability to be able to just go ahead and action a rate hike if you're getting further divergence between the growth of wages and the prices of goods. Because if you hike rates, you know, it's going to amplify this problem even further. Then you've got retail sales. This is also another really important component, because we're measuring here the sentiment of the UK consumer on one of our most important sectors. You know, when you think about economic growth in the UK being heavily service driven, and then you've got public finance data to finish the week off. So really big week here for the pounds. And then in the mix, of course, you've got the Brexit talks with Thursday's EU meeting. So plenty to go at. Okay, just running over a couple of the other headlines quickly. This is the latest out of the US. What I find amazing about financial news and market attention, or if you like, the hierarchy of events driving financial markets, and this is what I tried to teach the guys about the fundamentals in the first week, is about how the market actually is fairly blinkered in terms of how it views the importance of certain situations. If you think about North Korea, it's like North Korea issue has just gone away completely. No one's really talking about it at the moment, but all it would take, you would feel, is another missile launch and test in a sensitive area to escalate it further, and then would be back into this kind of potential flight to quality mode. So it's definitely something to keep an ear out for on the Squawk and an eye on Twitter. But the latest is from the US, Tillerson still pledging diplomacy first, which is the kind of take-home point here. So haven't really moved too much further on that issue, and it's been fairly quiet. However, at the weekend there were some suggestions of some movements north of the border that they could be gearing up for another missile test. So something to just keep in mind. Quite a lot of central banks speak over the weekend. You've had an IMF conference which saw all of the main chiefs speaking. This kind of summarising really the ECB angle. This is Constancio, who's the vice president. Eurozone inflation will pick up as the economic recovery continues, despite a puzzling disconnect between strong growth and weak wages. So this is the ECB basically telling you that, much like the Fed, that they're confident the inflation will start to rise because economic growth supports that argument, and so they're okay to go ahead and commence their tapering decision. This is the other, taking a slightly different tact here, looking at commodity prices. First of all, let's just have a look at crude oil this morning. You can see already we've managed to get above, I believe that was the weekly high anyway, that we had on the 11th. So we're already up at a 52 handle. So we're up about 55 cents in WTI crude this morning. Just looking at a daily continuation chart, really the upside level, if we can breach it, would be $53, which was printed back in, I guess that was late September. And the push above there starts to then put in the higher bound of where we were trading really for 2017. So why have we risen this morning in crude prices? Well, summarized by a couple of things. Potential renewed US sanctioning against Iran, as conflict in Iraq, that's the second and probably the biggest culprit for the rise in the price this morning. More tensions in Iraq, and the third point, an explosion at a US oil rig and reduced exploration activity has supported prices. So one of the main things I want to have a look at here, obviously we know Donald Trump is still going through this kind of decision making on how to sanction Tehran, but here is the main thing. Iraqi forces on Sunday began moving towards oil fields and an important airbase held by Kurdish forces near the oil-rich city of Kirkuk, Iraq, and Kurdish officials have said. Now, I've got a map here, because some of you might not be familiar with the area, and for the oil traders, I'll copy and paste this map into your chat room, because I think it's important to be aware of just geographically where the pipeline. So this is Kirkuk, if I explain it. This is the supergiant oil field based in Iraq that has about 5 billion barrels in reserve, and so the transportation goes through these two pipeline systems here, going off into Ceyhan through Iraq, then into Turkey. So this is the Iraqi-Turkey export line, which has become non-operational. So quite often when you hear news flow coming through, or you're trying to monitor the situation, it's these specific here. So Ibrahim, Sassan, Qusair, so these are the areas that you start to hear that could be pivotal then for trying to work out how much of an impact this is having or its respective importance. So this situation does need to be watched at the moment. Obviously, when we're talking about Iraq and pipeline or crude flow through that pipeline, I think we're talking like 500,000-600,000 barrels per day, so substantial. And then this was the explosion that happened overnight. A rig in Louisiana Lake Pointe-Chartrain drew market attention. At least 6 people have been injured. This also comes after US drillers cut back the number of rigs looking for new production as well. If you remember, for any of the oil traders, we have the oil rig count from Baker Hughes every Friday, and drillers cut 5 oil rigs in the week to October 13th. bringing the total count up to 743, which is actually the lowest oil rig count that we've had since early June. So you've got lower rig count, which would be supported by US output not going to continue to increase. You've had an explosion at a key oil rig in the US. You've got tensions rising in Iraqi forces on the Kurdish border, on their key pipeline. And then you've also got Donald Trump trying to arrange these new sanctionings on Iran. So multiple reasons why fundamentally oil price, to make some sense of this rise that we've seen as people price in these developments that have occurred. Okay, final things then. You've got Yellen. She was at the IMF conference. No surprises though. I would say she said exactly what you would expect her to say. Calls inflation the biggest surprise in the economy, but the US central bank expects to continue to raise interest rates gradually as solid growth and strong labour market and a healthy global economy lift prices. As she recognised though the inflation had been surprisingly low. So no different really from the minutes that we heard from last week. Rosengren, one of the Fed speakers, also speaking from overnight from the Boston Fed, said the Fed will probably raise interest rates in December and then 3 or 4 times over the course of next year. Current pricing for a December hike remains the same as where we were this time, well, when I was speaking a few days ago at the end of last week, 82%. Finally, I just want to quickly mention this because this is significant, because going into Wednesday night into Thursday, we get the commencement of actually something which not a lot of people in the kind of mainstream media are talking about, but I'm sure they will at the end of the week. This is the party conference that's going on. This is the main political meeting that happens every year in China. So ahead of that, the People's Bank of China chief has said to see 7% GDP growth in the second half, stronger than economists forecast. So if we look at the weekly calendar, this is important because this is it, the 19th National Congress of Communist Party, that begins Wednesday night for our time. And this is what shapes economic and social policies going forward for China for the forthcoming year. So it's always very important, particularly in the context of situation going on with North Korea and its relationship with the US and trade and so on. So I'm not going to go over this in full detail because this has already been sent out to your inbox. But in summary, you've got Theresa May heading back to Brussels for Brexit talks as of today. This is as she starts to try and get the ball rolling again ahead of Thursday, which is when the European meetings commence. So I'd be looking out for any type of scoops. Sterling's got a really big week for those aforementioned reasons, the headline being inflation rate on Tuesday, but then you've got retail sales on Thursday and the wage data on Wednesday, central bank speakers throughout the entire week, and I've not even mentioned corporate earnings in the US. So the bigger names, you've got Netflix today, which is often looked as a kind of sentiment for the FANG stocks. Tuesday, Goldman's, MS. You've also got IBM. Wednesday, eBay, Amex. Thursday, Verizon. Friday, General Electric, Procter & Gamble. So earnings season starts to really pick up pace now that the banking kind of week is over. We start to go into the rest of the S&P companies. And I believe we've got something like 50 S&P companies reporting today alone. So busy week ahead. This morning, as the land lies, I would say oil is a bit of a standout. Multiple reasons then, as discussed, for the support as to the push towards 52, whereas really it's European political uncertainty layered in with also this idea last week, if you remember, the Bloomberg ECB source comment suggested that even though it might be a longer wind down of QE, they might substantially cut 60 billion to 30 billion in purchases. So still a little bit of a downward bias in euro dollar, because this of course coming in the context of the Fed still indicating that they want to hike rates in December as per Janet Yellen at the IMF at the end of last week. Alright, going to leave it at that. As I said, I know very news driven, we've not really looked at the charts too technically this morning, but happy to discuss that now in the chat room for the next half an hour or so for those interested. Alright, have a good day and a good week. Thank you very much.